Hey, what's going on, guys? It's Will, up a little bit over 1.12% today, and that's $75 on my account. Today, I'm gonna be going over how you can trade options and just the basics of how you can enter a position using options. So hopefully you guys enjoy this video. If you do, please leave a like. He's sending it for stock, mate. Oh, shoot. That deserves a like.
Hey, what's going on, guys? It's Will. In today's video, like I said, I'm going into options, and I'm going to go into specifically doing buy call options. So you're going to start out with picking a stock, of course, and I'm just going to use the S&P 500 for this example. So I'm going to the S&P 500 SPY. You can see. And yeah, looks like an uptrend on the day, which is cool. So, you know, if you did a buy call, then that would have been good. So let's get into it. When you do trade, there's going to have the option for you to trade options. You know, trade options, they give a little explanation as far as what it is. So they say buy a call. I think it's going up. You know, that's pretty much, I think it's going down, buy a put. Okay. And short term, as in a close expiration date to when you place the order, it's going to be high risk. And then the further out the expiration date, which are these things up here, the less risk involved. So when we're looking at, so the reason today's date isn't on here is because they don't allow you to place an order with an expiration date that expires the same day on Robinhood. Then also, as you guys can see, they have the 25th, the 27th, the 29th, and that's Monday, Wednesday, and Friday. And they add 3 days per week. Some stocks, or most stocks, do one expiration date per week. So, that's what you get with using the SPY, because it's so liquid. There's so many people that invest with it, so they not only is this an advantage for you, so you can have more expiration dates to utilize, but you also get the opportunity to pay them more money. But it's really just a good advantage too, because you have more expirations. So all right, so first let's just get into it. When you're looking at this page right here, what you see is there's a share price, the AKA strike price. So this is just the share price that indicates that anything below this is considered in the money. And the reason it's considered in the money is because it is the same price or lower than the share price. So you could buy this essentially and sell it right away and be okay. And up here, these are things that these are all values that are higher. This is out of the money, and these are things that are higher than the price. So pretty much like to break even, you would need it to gain more, right? So in order to break even, the share price would have to reach 287.46 on the 286 call, and the reason it's 287.42 is because you have that's what I meant. 287 and 42 cents is because you have the premium of $1.42 that gets added. So let's just check this out. So we go to the say 286 call. I recommend, before actually we do that, I recommend that you guys buy in the money, just because there's less risk, and also like I said, it's more risk to have a closer expiration date. I recommend you do this based on your own opinion, because it's what you have your own trading style catered to, but I recommend that you go and have a further out expiration date and you buy a stock that's in the money. But really it's up to you, like it really is. And so you go to, let's say we're going 286 call, or actually let's just go 284 call, let's stay in the money. So you're gonna see this limit buy page. And pretty much, so one contract, equals, you control 100 shares. So you put one contract, it's going to be 100 shares, and it's 100 shares of the premium, right? So the premium is 247, right? So when you click on it, it's the limit price or the bid ask average of 247. It's going to be that times 100. So when you put one, it's going to cost you $247 to essentially control 100 shares. And you're going to go, if you wanted to get it right now, you go review, okay? And then you swipe up to submit. I'm not going to do that because there's one more thing I really want to go into. It's just a beginner video. I'm going to have more in detailed options videos. But let's just get into this symbol up here in the top right. So the symbol up here in the top right, you see SPY, $284 call for expiration date at 3/29. See the bid and the ask price. Now you want to usually look for a call that has a volume of above like 500 to 1,000, just so you have that liquidity and there's people that are investing in it, so you can exercise it right away. And also, so when you look at the Greeks, you have delta, theta, rho, gamma, and vega. And now these things, they all contribute to the overall price. The Greeks, they contribute to this options price. So the Greeks, like what they are essentially, they're just a collection of statistical values that measure the risk in the options contract. So, they're in relation to certain underlying variables. So like the theta, that thing is completely in relation to the implied volatility, which you see at 11.75%. And pretty much what that theta is, it measures time decay of the option. So, the theoretical dollar amount that you lose every day as time passes. So pretty much like the advantage of that is that the further out you go on the expiration date, the less the implied volatility, or the implied volatility will have a less effect on the theta. So as you guys can see, on April 12th, the theta is negative 0.08 and the implied volatility is 11.8%. Now, those kind of dictate the risk. So when we go something to a sooner date rather than April 12th and the 284 call, you can see that the theta is increased. So that's why and the implied volatility, right, is different. So the theta is going to increase as you have an expiration date that's closer to when you buy the stock. So the further out the expiration date, the less time decay that you have to worry about. And the further out you go out of the money, the smaller the chance of profit, right? Because you have a greater chance of profit when you're in the money. So, yes, if you follow me on Instagram or you watch my videos, then you know that I'm kind of like take the risk or lose the chance type of guy. And, but when it comes down to trading the less risk as opposed to trading the risky closer expiration date or putting it out of the money, I mean, it is your hard-earned money after all. Like, it's your decision, but the point is, like, you should do your own due diligence, right? And you should just be consistent in your due diligence, because what you look at about the stock before investing and knowing that the risk, looking at the risk and identifying that is ultimately going to like determine, that's going to be in direct proportion to your results. So just know, I don't mean to go off on a tangent there, but pretty much like it's really important that I express that like your trading success is going to be in direct contribution to what you put in, guys. And if you're putting in the work to learn about options, this is a basic video, but when you're putting in the work to learn about options and you're not speculating, because here's the deal, when you place a bet at a casino, you're placing a bet, you don't know the outcome, you're simply putting your money out there with the hopes of making more money, and you're risking your money. Now, that's a bet, And that's what a lot of people do, right? They don't acknowledge the risk. And you have to look at the risk as well. So, and options are risky, so that's why I'm kind of going over this. But even just in any market that you invest in, there's speculation, there's betting, and then there's also investing, right? There's the other side of the coin, which is investing. And investing is a probable investment, a educated investment. You see value in it. You identify the stock. You go through it and you do your due diligence. It takes hard work. It takes time, and you have to learn the skills in order to be able to identify good deals on a stock. But when you're able to identify the deal and you're able to have an educated investment as opposed to just betting, then that's going to make all the difference when it comes to growing your account. So yeah, guys, again, if you want to place an order, just basic, you get one contract, and it's going to cost $247 because it's that limit price, the bid-ask average, times 100 shares. So essentially you control 100 shares. It's very risky, like I said, but you know, the further out you go on the expiration date, and the more in the money you are, the less risk, and then the closer expiration date and the less in the money or out of the money you're in, then the more out of the money you're in, you're going to have more risk. So all you're going to do to place an option or a buy call is you're going to go ahead and review, and then you're going to swipe up like that and it will order it. And pretty much when you do it, I'm going to do it for the purpose of this video. Pretty much it says order received, and then you get the confirmation email. And now, oh, I guess it didn't show it, but pretty much what you get is you get another chart that's not the share price, but it dedicates everything to the fluctuation of the call option. So, you know, that's good for you. It's pretty much like how much you're making. It's just a chart of how much you're making. It's just like looking at your day chart, except it's for the option only. So, you know, if you're doing a put and you're betting against it and the stock goes down, your chart's going to show it's going up and whatnot. So, yeah, guys, that's pretty much it for this video. Hopefully you enjoyed and it helps you to understand better the options and what goes with it. And if you guys enjoy this video, please go ahead and subscribe down below. I really appreciate it. You don't have to, but you know, it's up to you. If you want to learn more about how to invest using Robinhood, then I absolutely recommend that you also get my free ebook. It's Free Investing, 7 Tips on How to Profit Consistently in the Stock Market. Totally free. All you have to do is enter your name and your email. So again, guys, I didn't mean to go off on that rant too much, but like, it's just really important that you guys do your due diligence before you invest. And when you're trading, you're not going to get the results right away. You're not going to just magically become profitable in the stock market. It takes hard work and consistency. It takes contribution, and you're going to get results in direct contribution, right? So you're going to experience a increase in your account when you increase your knowledge of what you know. And that's really just it, guys. So again, hopefully you guys enjoyed, and I'll see you guys in my next video. Thank you so much for watching.